What's the fear level out there, meeting to meeting at Crossmark?
Yeah, it's gone up definitely over the last quarter. Each meeting that we have, people are concerned because we've been telling our clients, we think there's going to be some choppiness here. We think we're going to see a pullback in the fourth quarter of this year, so we need to be prepared for that. So they're getting a little concerned. What we've seen as of late, though, is more people wanting to go into the bond market. They see these yields. They think that we're probably at peak or close to peak in bond yields. You know, we were, 4.25% in October of last year. We think that's the peak for the cycle. So if those yields start to come down, they want to add some duration in their fixed income market. So we're seeing that there. But they like the fact that we're being cautious a little bit in the equity market. We're invested, we're in there, we're getting them a good return, but we're being a little bit cautious as to where we invest.
So I just want to go through the chronology of this year. It was, I believe, a soft landing, then a no landing, then it was a hard landing in March. John, you've been very good about documenting the different narrative shifts. You're tracking it. Now we're in soft landing. Do you buy it? Are you basically leaning in that there is this idea, just to use divine soft landing, that we could get back down to near 2% inflation without unemployment rates really rising all that much?
I don't think so. I don't think we're going to be able to have whatever the magic is, the sparkle dust that's going to make that happen for us. I mean, we assume that the Fed, we're close to peak Fed funds rate. Are we there? I don't know. I wouldn't be surprised to see the Fed go another 25 or 50 basis points. When you look at some of the inflation numbers, you look at average hourly earnings over the last 3 months, it's up about 5% on an annual basis. If you look at just the goods producing sector over the same time frame, up 7%. We've got the UAW, their contract ending in September. We could have wages go even higher then. So I think there's some underlying pressure on inflation that's going to continue to be there. And you have an economy that is doing pretty well because the consumer is there, because the labor market is strong. So at some point, we're going to have to pay the piper for everything that we've seen up until now. I think we could start to have a consolidation around a 4,200, a 4,300 on the S&P, take us back another 5%. To us, that's your opportunity to get into the market.